What stood out from you from these figures?
Well, in part, it is the triple whammy that we're seeing, the exports, imports, and deflation risks too. But just looking at those export numbers, that miss from forecasts, really a heavier drag on the economy than we initially expected. Now, that year-over-year comparison was always going to be a little bit tough, because if we think about what was going on last year, we had this lift after the lockdown on Shanghai was lifted, and that helped obviously boost numbers there. So it was always going to be a challenge, but this certainly is somewhat more negative than people were expecting. The other issue here, as you flagged, is this global drop in demand. You know, we saw sort of PMI numbers signaling a contraction for several of China's key trading partners, the US, the Euro area, Japan, and so on. So yet another worry.
Well, the triple whammy justifies huge stimulus, but some say that, you know, in terms of fiscal and monetary stimulus, in terms of policy, that's pretty limited.
Yeah, absolutely. I mean, I think in general, economists weren't necessarily expecting to see any of the sort of promised stimulus or any of the stimulus measures really showing through in this set of data. And it will, of course, take a long time to implement any policy. But as you say, I think there is this sort of moderation of expectations. We saw this dovish tilt that then helped sort of spur that rally in some Chinese equities. But there is a little bit more of a sort of sanguine, perhaps assessment, reassessment. The worry, of course, is that there's not just a lack of capacity, but also a lack of willingness to roll out what some have called the sort of big bazooka stimulus. I mean, the other thing to sort of keep watching here is the pressures on corporates and factories. My colleague Eugene had a really nice story today looking at some of the deflation pressures on business owners, looking ultimately to sort of trim and narrow their profits in order to remain competitive. Again, they are using this sort of excess inventory that they've built up over COVID and trying to sell that off. But this sort of weakening CPI and weakening consumption in China is a real overhang for them too. So certainly something to keep watching there.
Well, absolutely. It just points to, you know, people not wanting to spend, you know, the comparison often is drawn, Rebecca, that this, they have to be careful they don't end up like Japan did 20, 30 years ago. That's one of the things. And deflation here, what does it tell us? Because, you know, we've had the inventory overhang for ages now, and that's been reflected in the PPI figures.
Well, there is this sort of, I think, dual worry going on that China may be locked in this downward spiral, lots of comparisons to Japan, of course, as you say, and essentially struggling to pick themselves up. There's two issues. One is there is a confidence issue, partly, for example, because of the crackdown in the property sector, the drag. You know, this is once sort of the most stable and surefire way for China's middle class to increase their wealth. It's their biggest asset for most households, and that's no longer retaining or rising in value. So that's a significant overhang. But the other sort of secondary worry, and it's hard to calculate how big a risk this is, but it's not just an issue of confidence, but that perhaps there is a reduced capacity to spend too. Now, that's slightly more worrying because it suggests that policy enough sort of stimulus, even if it came in the form of sort of a direct handout, which there is no hint that we're getting there, although some economists have said that that's necessary, but even that might not be enough.